Good morning. You're watching Business World Live. I'm Danie Laurel. It's 10:30 a.m. this Monday morning in Manila. We are about an hour into the shortened trading day. Let's kick off with our banner story. Borrowings in the first 5 months of 2020 surged to over 1.5 trillion pesos. That's as the national government looked for more funds to bankroll its COVID-19 response program. You can see on your screens here, data from the Treasury showed that in the month of May alone, state borrowings more than doubled to 290 billion pesos. That's from 126 billion pesos a year earlier. The 1.5 trillion peso debt in the first 5 months of 2020 almost doubled from 787 billion last year. It is also higher than the total debt of 1.02 trillion pesos for the full year of 2019. Three-fourths of the borrowings came from domestic sources, while the remaining quarter came from foreign lenders. The Philippines is ramping up borrowing to fund its budget deficit that is seen to hit 1.61 trillion pesos or 8.4% of the GDP due to the health crisis. And the Treasury says it plans to offer at least 30 billion pesos in 5-year retail Treasury bonds. That's to raise more funds amid the pandemic. The Philippine Star reports the price-setting auction of the securities will be held on July 16. At least two traders say the RTP offer will likely be met with strong demand. That's as the market remains flush with cash. Meanwhile, quarantine restrictions in Metro Manila may be eased if LGUs can act swiftly to contain the virus in their areas. That's according to Cabinet Secretary Carlo Nograles. But Nograles says NCR's chances of being downgraded to the most relaxed, modified general community quarantine would depend on the data of infections as well as capabilities of LGUs. The Health Department failed to issue new data on Sunday, July 12, due to what it said was a significant volume of data gathered. The agency released the numbers for July 12 just this morning. So far, the country has logged 56,259 cases. That's after registering 2,124 new infections. The new deaths stood at 162, while 2,009 new recoveries were reported. Total active cases stand at 38,679. Moving over to our markets here, you can open the Bloomberg terminal with me. We can see that we are opening in the back foot, 6157.17, down 40 points. That is down by 0.7% in the first hour of trading. Now, recall that the index closed flat on Friday, even as it was up by 0.07%. But on a weekly basis, and this is the weekly chart you can see here from the start of the week on Monday last week, we were actually down by 2.75%. And apart from just the value of the index, also the turnover for the week was slowing down by close to 23%. So we had an average of 6.5 billion pesos worth of trades daily. Now, 2TradeAsia.com is saying that this weak performance of the local bourse last week was due to a dampened investor sentiment, really linked to the higher coronavirus infections. Apart from that, also some political issues like the signing of the anti-terrorism bill into law. Again, as I reported earlier, we have close to 40,000 active cases right now. And I just want to pull out the net foreign selling chart, because you can actually see after having surged the week prior, last week saw again an exodus from our foreign investors. You see outflows reaching an average of 1.14 billion pesos. That was from an average of net foreign buying of more than 1 billion pesos the week prior. Now, this on the back of Asia and the rest of the world actually seeing a bit of a rally here. Asia opened higher on Monday following how the US performed, at least on Friday. You can see on my terminal here, the Dow Jones up by 1.4%, the S&P 500 as well up by more than 1%. And Asia, I'm just going to open that up for you. You know, even in Shanghai and over in Japan, everyone's seeing quite strong gains here. The Topix, for instance, up by 1.9% as of 10:15 this morning. And this despite the fact that over in the US, you've still got record cases in states like Florida and Texas. And last week, we had global markets ending the week with gains, China markets in particular surging, with the government promising them a better future. But as I mentioned, over in our local bourse, the sentiment is definitely not the same as we've been seeing globally. I want to just pull out our sectoral indices here. Last week, we actually saw all of the sub indices in the red, except for the service and the mining and oil index, which had ended with some gains. And you can see here on Monday morning how those fortunes have reversed. You see the services sector now pulling back a touch, and properties as well pulling back a touch, but mining and oil still continuing that rally. Now, what is the rationale here? Now, Chris Mangan of AAA Equities in their latest report said that when in doubt, investors go back and position in the sectors that have performed well during the crisis. And this is usually the telecoms and the basic commodities retailers. These are all under the services sector. And he said that's why services had been performing well last week. Another thing that might be propping up the mining and oil sector, according to Chris Mangan, is the gold prices. So he did mention that there's an all-time high in gold prices. But what is the forecast for the week? So let's pull back our chart here. AAA Equities saying the upside is limited as of right now, saying we might be seeing it lower towards the end of this week. One thing to watch out for is the increased mobility. So 50% of the public transport system is now operational. Whether that changes and improves is going to be one thing that investors are watching out for. Phil Stocks' Jafet Tantianco, of course, saying a downward bias is still there in tandem with the surge in cases. One other thing Phil Stocks is saying is to watch the regulated stocks. And we did have the big news last Friday. That is, of course, the Congress denying the new application of a 25-year extension in the legislative franchise for ABS-CBN. The House voted 70-11 in terms of denying that franchise. So critics are seeing that as an assault on press freedom. You've got, for instance, Phil Robertson. He is the Deputy Asia Director at Human Rights Watch. He said that was a black day for media freedom in this democratic country. Another thing to be highlighting here from an economic front and not just political is the fact that there are 11,000 workers of the media network that will be losing jobs or are in jeopardy of losing their jobs. You've got Senate Minority Leader Franklin Drilon saying he's deeply saddened by this episode reminiscent of the dark pages in history of Philippine press during martial law. Now, another thing to be watching out for here, according to Phil Stocks, in terms of the markets, is that this is causing worries about the business climate in the Philippines. Investors are now looking again at the regulated stocks and how vulnerable they are. Now, in terms of ABS-CBN, you can see on my terminal here, it is on a trading halt. You've got a lot of analysts already expecting this to be just collapsing. That is the word that AP Securities' Rachel Cruz is saying. This will cause the stock to collapse. They have been, of course, very vocal about transitioning to digital, but this will be very small part of their business, according to Rachel Cruz. Another thing to be watching out for here that has been surging is GMA. I'm going to pull out the one-day chart for you here because GMA had actually surged by close to 41% just this morning. And you can see it actually right now up by 17.74%. So pairing back those gains, they are moving as ABS-CBN is still on a trading halt. Now, one thing to watch out for are the other Lopez stocks. So apart from just the parent company and Lopez LPZ, you've actually also got First Gen and Rockwell that investors are very closely watching out for as they relate to the ABS-CBN fate. So more to discuss on markets and the economy with BDO's Jonathan Ravelas later on in the broadcast. Okay, let's check in on the biggest stories we're watching this morning. The Finance Department and the Central Bank are renewing calls to amend the country's bank secrecy laws. This is after the Philippines got dragged into a financial scandal involving German payments firm Wirecard just last month. PSP Governor Ben Diokno said in a forum last week that they have been urging Congress to push reforms on the bank secrecy law to align it with international best practices. Finance Chief Sonny Dominguez added that the lifting of bank secrecy can benefit government collections since it will make it easier for the Tax Bureau to go after evaders. The Philippine Star reports that the Bangko Sentral is conducting a review of banks and other financial firms' exposure to money laundering and terrorist financing offenses. The House panel on banks and financial intermediaries is likely to pass the bill amending the Anti-Money Laundering Act of 2001. That's within 2 weeks after Congress opens its second regular session. That's on July 27. A measure that expedites the privatization of government assets to raise funds for the coronavirus response has been filed at the Senate. Senate Bill 1519, or the COVID-19 Economic Lifeline Act, seeks the sale and disposition of non-performing properties or the assets owned by the government. The bill's author, Senator Francis Tolentino, said the proposed measure serves as a new way for the government to augment public funds, which will be used to help countless Filipinos and businesses amid the pandemic. Tolentino's bill also creates the Finance Department-led COVID-19 Privatization Commission to oversee the sale of state-owned assets drawn from a priority list. This list will be prepared by a separate office called the COVID-19 Privatization Commission Management Office. The proceeds from the sale will be directly used to fund the COVID-19 response, but the commission will be allowed to retain up to 5% of the amount for its operations. Now, another alternative mining bill has been filed at the Senate seeking to regulate exploration and development of resources and adding more safeguards for the environment and the indigenous peoples. The Philippine Star notes that this newly proposed measure is similar to the Alternative Minerals Management Bill, which has long been pending in Congress. Environmental Coalition SOS Yamang Bayan Network said the bill's filing comes at a crucial time when the Environment Department is looking at mining as part of the government's economic recovery stimulus to cope with the pandemic. The Philippines is a highly mineralized country with around 14 million hectares of land known to be potential sites for metallic and non-metallic mineral reserves, but Senator Grace Poe pointed that the local mining industry remains underutilized. The bill noted that some provisions of the Philippine Mining Act of 1995 are flawed, causing limited investments and weak mining policies. Aside from prioritizing the needs of the domestic economy, the alternative mining bill also seeks to increase government share to 10% from gross revenues earned from the development and utilization of mineral resources. We'll have more of the market news when Business World Live returns after this short break. Stay with us. Guys are back watching Business World Live. I'm Danie Laurel. Now, just when we thought the worst was over, surging cases in the domestic front of COVID-19 threaten our path to recovery. Here to share with us his revised outlook, we have BDO's Chief Strategist, Jonathan Ravelas. Good morning, sir.
Good morning, Danie.
Hi, sir. Listen, sir, we're so happy to have you on air today, especially since, we had discussed this on June and it's now the middle of July and so much has changed since then. The slides that you had shared with me had, 15,000 cases. Now we're above 56,000 cases. Before diving into the economic issues, let's just talk about the COVID-19 issue here. What is going on here? Why hasn't the lockdown, which is one of the most severe longest in the world, done anything at all in terms of the numbers? And are you disappointed?
Well, basically, I guess the lockdown actually provided us an opportunity to, one, build our uh, hospital facilities. So, assuming we had the worst. Now that we've reopened the economy, the risks right now, of course, is that there this potential surging cases. So we should be able to eventually accept the potential risks that come with reopening the economy. And I guess now that we have rising cases, that means we need to be able to take more precautions. We need to prepare ourselves on how to handle this without going back to a lockdown.
Okay, sir, what I note here in your presentation, and I'm gonna ask my producers to flash it, this slide 7, which is a recovery for the Philippines compared to the global growth outlook, despite the fact that, as you mentioned, there are rising cases, which you said that, is something to be expected when you reopen the economy. It's not the second wave we've been seeing all over the world. You still are betting that the Philippines will be performing better than other countries, at least in a ASEAN region, that have been able to actually reduce their number of cases. Why is that, sir?
Well, basically, I guess now that we've reopened the economy in June, we remember we're a consumption driven economy. So now that we've been able to sort of open it, and the expectation is we've seen the worst at probably for the second quarter, and that's the reason why the central bank probably have cut rates further because of a much bigger drop in GDP numbers. The assumptions here is that by the third quarter, we should be able to have passed the Philippine Economic Stimulus Act to be able to
Okay.
support short-term and medium-term expectations. That's why we're looking at a negative 2.3 towards the for the full year 2020.
Which I have to highlight, sir, is not, it's bad. Of course, it's a contraction, it's a recession, but it's still not as bad as even our own economic managers are looking at. So, would you say that you're still rather optimistic compared to the bulk of other economists?
Definitely. I guess, when we try to look at, well, my own anecdotal is that if I wanted to see how the Philippine economy performs, I would actually just look at Viber, WhatsApp, Facebook, Marketplace.
Okay.
You will actually see a lot of people doing transactions online, buying food, trying to make do of working at home. And
Mm.
this eventually highlights your robust economy remains. It's just that it's actually the underground economy that we see. That's why you need additional revenue.
Sir, let's talk about the fiscal side first before we go back into your point on the monetary, the BSP doing the heavy lifting here. A lot have criticized the fiscal part, saying, monetary policy has been preemptive, but the fiscal, it's taken a while for that to happen. We have a slide here where you even break down the cash. We had the money before, and Secretary Dominguez was very keen on saying that we have fiscal space. We had tax reform giving us higher tax collections. We had customs collections. We got ODAs at very cheap rates ahead of this pandemic. Have we used it all up? Do we still have fiscal space? And has it been used in a way to prevent a massive dent in our economy going forward?
Well, basically, I guess the situation today, despite that we have additional leeway before, they were all eventually done to do what it can to keep the economy afloat, eventually help people who are affected by COVID, support the 18 million families that are affected. So we still have the potentials to eventually do more. It's just that with the lockdown, it also affected our revenue stream, which was heavily affected by the lockdown. So yes, we still have the funds to probably continue. And well, the slide that you see here highlights that we still have over a trillion pesos in cash as of June 1. But eventually, with the additional borrowings and the government bonds that we're expecting to be issued by the starting the 15th, should be able to, you know, bring us through. But I think what is important, and this was highlighted in the pre-SONA, is the potential fiscal spending on infrastructure. This should help substantiate the potential recovery. So that's what I think uh, what is lacking. The cost of doing business, which is the central bank has done, which has been very much preemptive, should be able to be supportive once the government is able to launch its fiscal spending through infrastructure. And in other parts of the country, we're seeing some of these infrastructure still ongoing, no, from a local government perspective. Although they're not much talked about, but that is actually trying to help restart the economy.
Sir, safe to say, and our economic managers have said the same thing. There's much more spending to be done than was anticipated earlier on. And like you mentioned, this might be eating up into the budget that we had for, not just social amelioration, but infrastructure, which is what we need to spur the economy. So the budget deficit is much higher than was previously programmed. Where will we get the money if, as you mentioned, this is what we need to jumpstart the economy? One of your slides says, digital tax, but this has been highly contested. Oil, even more fuel taxes, motor vehicle taxes. Will not this, burn consumers' pockets even further?
Well, it's a bit ill-timed to do it, mainly because we're not in an expansionary mode. It would have been, I think, these taxes would have been of no problem to anybody had we have a good economy, just like what we saw in 2017, 2018, despite the inflation, 2019. A rising tide lifts all boats. But the situation today eventually highlights something different. But we need to get government revenues to support our fiscal spending and eventually keep a balancing act so that we're able to also keep our credit rating. So this is also a measure that despite we continue to spend, we still want to keep a tight lip on our borrowing and our spending requirements.
Sir, can you highlight a bit more on the consumer spending? You mentioned that anecdotally, people are still, hustling. People are still trying to do businesses underground, like you mentioned. But you got a slide here that says we've seen the declines the fastest since 2009. Possibly, maybe, we haven't gotten the data yet, but it might be worse than the Asian financial crisis. So many lost jobs, record high unemployment in the month of April. Tell us, how does your GDP relate to the fact that consumption, as 70% of the GDP weight, will just pummel this year?
Oh, well, basically, I guess what the data that was seen there was the first quarter GDP numbers, and consumption really went to a low. You understand that in the first 3 months of the year, we were surprised by something very much significant. We already had fears of, remember, we were coming out from a 2018 that is falling inflation. Prices were normalizing. Second, you have the impact of the Taal in January. Then you had the impact of the lockdown from China in February and eventually March. So importation. So again, it became a problem that people started fearing. And from a consumption perspective, uh, this is where you get to see that you don't know what to do. We've
Mm.
seen people really consuming less during this period. And this is the first time that we've seen something like this, that it's even below our population growth rate of
Yeah.
1.6%. So again, hopefully second quarter should have adjusted that. Now that people have slowly rediscovered the undiscovered country, which is basically the digital space. People use
Okay.
Viber, people use WhatsApp, Facebook to eventually market, you know, to get to see a vibrant consumer market that's there. So again, if this is placed well, and we're able to regulate this in such a way that we're able to keep it going, then this
Mm.
could be this could be a good uh, significant level of spending. And at the same time, uh, this could also be our barometer. If online purchases will go down, then definitely people are willing to go out and eat out
Okay.
and go to the malls again.
Very
So these
interesting
are
point,
things
sir.
that we might want to look.
Okay, that we haven't really measured as of now, but this underground economy. So let's go to monetary policy. On the one hand, so very interestingly, you say you are calling for the BSP to do another rate cut by the end of the year to bring our benchmark to 2%, and at the same time you are warning against upside risks to inflation. So that basically puts us for sure in negative real interest rate territory. Is this something necessary for growth? And if so, is this a temporary thing? And how long will the lag effect of an easing stance from the Bangko Central be felt in consumption?
Well, basically, normally the impact on interest rates varies from 6 to 10 months down the line. So basically, what the central bank has done is to be able to be more proactive in trying to bring down the cost of doing business. They
Mm-hmm.
understand that we have probably based on the data that they have, uh, and what we're seeing is that the second quarter GDP numbers have been much worse, and they were looking at 6 to 7% in a construction. So we're
Right.
technically in a recession. We're just waiting
Correct.
for the numbers in August. Now, if there will be a delay of the passage of the Philippine Economic Stimulus Act and the other revenue measures that are we're expecting from Congress, then definitely the potential U-shaped recovery could be delayed. And
Mm.
that's why we're seeing the central bank doing a Marvel moment by doing more of monetary policy over the fiscal policy. So until such time, the government has realigned most of the uh, fiscal spending that is needed to support the economy. So which means they've realigned what are the most important priority government projects that needs to be funded, and that should eventually have an effect on the economy.
Sir, your recovery plan in one of your slides here says that we should be by now, July na tayo, in a recovery stage, right? And so yung emergency stage mo was until May. Can you say honestly that that still holds? We're out na ba of the emergency stage? And if you mentioned that, the BSP takes 8 to 10 months for a rate cut to be felt, and for liquidity to come out, how can you say that we are in a recovery stage, or is this going to be prolonging this emergency stage?
I think we're just waiting for clearance from the doctors. I think at this time, so to speak,
Okay.
we might have stabilized for now in the ICU. The problem is we need to see more steroids or strong medicines to ensure that we can stay out of the ICU. So what we need to be able to see then was the stimulus package that I was talking about that should support in the near term jobs and SMEs and other businesses to be afloat. And at
Mm-hmm.
the same time, the additional revenue measures so that the government can eventually push through with its other plans in supporting the economy.
So our last question before I let you go, of course, your outlook on the equity markets. Some surprises here. You've seen bright spots, and also just your outlook on the second quarter earnings that are coming out. Has that already been priced in by investors? All of the risks, and are the risks still on the downside or on the upside?
Okay, if we tend to look at the equity markets, I guess the key risk is that we're in a consolidation between 6,000 to 6,500. I guess the expectation now is that now that we reopened, we're expecting further reopening of the economy. So second quarter earnings could be a very good, significant signal whether we've seen the worst of the earnings side, and we could actually anticipate a potential recovery in the second half of the year. The key questions, of course, are not just on the domestic front. You have issues of inflation. So these are things that we need to sort of digest The other side is that there are other things from an external perspective that we should be watching out for. One of this is basically the U.S. China tensions, and
Mm.
recent headlines are saying there's no second phase, according to Trump. Then you have geopolitical risks rising within Asia. So this, of course, will continue to provide a temperature in the markets at this time. So despite the fact that you're in a consolidation, people are still focused on more of the uncertainties that will keep us more sticky towards the 6,000. Now, of course, there are issues that are still there, and we recently saw concerns over the regulatory risk, which we thought
Correct.
would have been finished
Mm.
in the first quarter, but suddenly its resurgence is here. So that will also keep investors a bit sidelined at this time.
Okay, so investor sentiment when it comes to the market still pretty shaky here, but Jonathan Ravelas, chief strategist of BDO, still very optimistic in terms of a consumer-led underground recovery that might actually help pivot our local economy. Thank you so much, sir, for your time and insights today.
Thank you, Danny.
And that was a first look into the business day. Today is July 13, 2020. Catch us again tomorrow morning, 10:30 a.m. I'm Danie Laurel, and we are One News.